Welcome to Techquity, our show on tech stocks. I'm Fred Katayama. Next, more analysts like Facebook, more praise for Amazon, and more gains for 3D Systems, one of the top performers in 2012. First up, Facebook, one of our four horsemen of the internet. Stifel Nicholas and Bank of Montreal, the latest heap praise on the company. Stifel predicts more buying of the shares ahead as it sees Facebook joining the S&P 500. It thinks the social network continues to improve efforts to make money off of users, and therefore has raised its earnings expectations and its price target. The price target going from $26 to $31 with a buy rating. Shares are up about 2% today, near 26. BMO, meanwhile, thinks Facebook should benefit from more ad spending from large brands. It has raised its rating and doubled its price target after 2-month restriction. And those good vibes for Facebook should continue into next year, predicts Greencrest Capital's senior analyst Max Wolf. He spoke with our John Marino recently about the company and the other members of our four horsemen.
One of the things that makes me a little bit concerned for Facebook in 2013, I expect them to have a good year. I think the worst is behind them. So that being said, is they've been eating Yahoo's lunch for a long time, and that's an awful lot of the revenue. I think Yahoo's in new and capable hands. I think that they are actively trying to eat their own lunch to get strong enough to start eating other people's lunch. So I think that sort of low-hanging fruit has been picked, eaten, digested, and you know what happens after that. So I think they need to figure out a genuinely social way to monetize their user base, not trying to seize the content and advertise against it. I don't think they're going to ever make a fortune trying to get people to pay to have their friends see their postings or their wall additions a little more than everyone else's. They need to do something genuinely social, and they need to show those various ad agencies that they can track you. I think Facebook Exchange is an exciting product, and I think their ability to deliver better metrics using big data themselves is really the only hope for them to grow back into the $100 billion valuation they came out with in the next 18 months.
Who out of our top four do you really see as being the best stock of 2013? That's Apple, Amazon, Facebook, or Google?
I expect Apple to be the best performer in the beginning of 2013, partly on a recovery basis. And I expect in the long run, across 2013, I'd bet on Amazon. And I think that Amazon's cloud investment is at the very edge of beginning to bear some kind of fruit. And I think that they might do well. Likewise, Microsoft is taking the biggest bet, so it has the biggest upside, as well as probably the biggest downside. So that for volatility, for kind of soar or sputter itself, Microsoft would be my winner. But I expect Apple to start off galloping ahead of everybody else, and I expect Amazon to end the year pretty well. She's had a cycle, Amazon, of huge infrastructure investment with margin compression, followed by really short bursts of margin expansion, which tend to be very good for the stock, which already trades on the assumption that's going to happen. I expect Amazon to have quite a solid 2013.
In 2012, we all know Facebook had a rough start and remains down. Amazon, though, is up more than 40%. Apple's late year decline, leaving it ahead about 25%, while Google's gain is under 10%. In our soaring and sputtering today, the best and worst of 2012. First, the S&P 500 info tech sector. The soar is Seagate Tech, the hard drive maker, up more than 80% this year as it recovered from supply chain disruptions caused by floods in Thailand. The sputter is AMD, the chip maker hurt by the move from PCs to tablets, down close to 60%. In the NASDAQ 100, the tech stock with the best year was travel site Expedia. It climbed more than 100% on strong profit growth, especially in its hotel business. Marvel Tech, the big loser, down nearly 50%. It lost a $1 billion patent lawsuit earlier this month. And finally, Tiny Tech. We look at the best and worst from the S&P small cap infotech sector, focusing on stocks that started the year with at least a $5 price. The best, 3D Systems, the maker of 3D or rapid prototyping printers, up 250% as sales leapt. And the worst, STR Holdings, the maker of parts for solar panels, falling as its sales sank. Shares down about 70%. And that's Techquity this Monday. Remember, you can follow us on Twitter at RTRS Techquity. I'm Fred Katayama, and this is Reuters.